Hello, welcome back. I'm with Jim Gregg, the president of Benchmark Metals. Jim, good to see you.
Good to be here, thank you.
For those less familiar, just a brief overview of the company.
Benchmark Metals is a gold and silver developer and explorer in northern Canada. We're embarking on developing and expanding Canada's next major gold and silver mine.
So just run us through, just to start with, the capital structure of the company, sort of cash in the bank, market cap, burn rate, all that sort of stuff.
So we're a Toronto venture listed company. There's approximately 250 million shares outstanding. We recently completed a financial raise. There's in excess of $21 million Canadian in the treasury, and we're fully funded for all of 2023.
Good, okay. As you've just completed the financing, what was the use of proceeds? How are you going to spend the money?
So we are on the verge of another major drill program for 2023. This will expand upon our existing 3.6 million ounces. But the drilling will expand ounces. It will also show that there's some very good high-grade underground potential. And we're going to test some new discovery targets across this big, long 20-kilometer trend. So engineering, expansion, and exploration, a lot of work ahead, and it should bring some good results for the company.
Good. Let's take a step back and actually look at the deposit as it is at the moment. Maybe you could just talk geologically, what sort of ore body are we looking at here? And then maybe you could just tell us a bit about the grade and the size of the resource at the moment.
Yeah, it's a formerly producing asset. So in the late 1980s, it produced a good quantity of gold and silver. It's epithermal, low sulfidation. Mineralization is right at surface. In the preliminary economic assessment and our resource estimate, we showed that there was a large quantity, almost 3.6 million ounces in 3 large open pits. But what is noticeable and what has been drilled to date is a lot more material remains open below the pits that is much higher grade. So quite exciting times ahead for the company.
So is that where most of this budget will be going to, or a portion of it will be going a bit deeper into the pit and finding the higher grade and increasing the resource overall?
That's right. There's a transition now. We're pivoting a bit on our economics for the PEA. They were very good, but now we've established that the underground potential will reward the economics, and we've already drilled some of it, but we will be reworking the PEA to include underground ounces, but also expand with more drilling.
Brilliant. This obviously PEA released in, I think, September, wasn't it? Or was
That's
it?
Correct, yeah.
Run us through the highlight numbers, post-tax numbers, if you don't mind.
Yeah. So it was a $484 million Capex for the PEA, and must keep in mind this was open pit only. This underground potential is our newest endeavor. 12-year life of mine that would produce 163,000 ounces per year, gold and silver. And the economics were quite strong. It was a 2-year payback on a 12-year life of mine, which is exceptional. Just over 31% IRR. And our NPV was almost double the Capex, just under $1 billion. So some good, strong numbers for a first engineering study.
No, that's a good ratio. What sort of pricing did you use for gold and silver in the PEA? And did you do any sensitivity pricing around what it could be at a different price?
We did some sensitivity analysis. The prices we used are at current levels, so $17.30 gold and $21 silver. The opportunity, of course, is a very rational thought. If the price of those commodities go up, then of course your revenue stream increases. But at current levels, we're showing a below $800 all-in sustaining cash cost to mine this, which is a very good margin considering gold is currently at $17.50. So, the economics and the engineering appear to be very good to build this mine.
And what about the metallurgy? How are you actually going to get this out of the ground? How easy is it to process?
Yeah, it's a conventional flow sheet. We've run 3 different analysis on the metallurgy. It's quite advanced. We're recovering just over 92% gold recovery and about 75% on the silver. Very clean flow sheet. It's gravity recoverable, so crush, grind, gravity recovery, whole ore leaching, And then there's a Merrill-Crowe circuit to aid with silver recovery. So it's a proven, effective method for recovery, and the numbers are quite strong.
Good. Okay. I guess looking at the regional land package here, what sort of neighbours do you have in the region? Are there any other producing mines that potentially have extra capacity that you might not necessarily have to go down the route of building your own plant?
Yeah, this area of northern Canada in the province of British Columbia has very good representation from some of the largest miners in the world. So within our neighborhood, we see Freeport McMoRan, Centerra Gold, Newmont, Newcrest Mining. There's been $5 billion in mergers and acquisition in northern British Columbia. And our full-on plans are to go through the permitting process and get towards production. But I think because of this activity with the majors in the area, our scope and scale is world-class and growing. There is potential that we become a takeover target.
Yeah, well, you're already a very deep, sizable deposit at the moment, right? And there's enough ounces in the ground. I mean, you're processing over 100,000 ounces a year, which is very desirable. You've mentioned permitting there. Whereabouts are you? Obviously, you've only just done the PEA. I assume you're doing your baseline and you are working through that at the moment? Yeah,
that's right. Actually, we're quite advanced on the permitting efforts. We need to complete a feasibility study first because the project description is stripped from the feasibility study, and then your formal permitting process begins. So the feasibility study will be completed in 2024. But we've already completed the majority of all our baseline environmental work. So flora, fauna sampling, wildlife studies. We've advanced the engineering and the environmental and the baseline work to a feasibility level. So, the only changes that are going to happen in the near future is expansion of the resource and improve the economics.
Good. Okay, let's look at a timeline as to how this might unfold then. So let's see how the next, say to PFS, what sort of updates and news flow should we be expecting?
So in 2023, up to 30,000 meters of drilling. That goes towards some new discoveries, but also expanding the current resource. And then we will be updating the PEA with a new study that incorporates the underground high grade and some improvements to the Capex. So there'll be plenty of news flow.
When's the PEA due? Is that after this round of drilling?
No, so the steps here would be first half of next year. So in the next 3 to 6 months, there would be an updated PEA. And then that would be followed by a large drill program, and then the feasibility study for 2024.
Brilliant. Okay. I guess looking back over the last 12 months as a company and a management team, what are you most proud of?
Well, I think quite literally we have gone in 2.5 years from virtually no ounces. The geology looked very prospective but very rewarding. And through that path, we've generated 3.6 million ounces. We've completed advanced engineering. We're recognized as perhaps one of the 5 best resource projects in Canada, big scope and scale. This is a project that's sustainable. It's not acid mine generating. We're a new discovery on a formerly producing asset. Less disturbance because of that. And we're working with communities and Indigenous partners who are looking for responsible development, but also the economics that are generated from it. So I think our community involvement is one of our best achievements to date.
Brilliant. Jim, thank you for your time.
Thank you.